morning. You're watching the Business Today show for the market opening action with me, Sakshi Batra, where we get you all the opening action in trade. First up, let's take a look at the top headlines this hour. Modi government launches National Monetization Plan 2.0, targets a whopping 16.7 lakh crore rupees in asset monetization in the next 5 years to bankroll infra dreams and fiscal health. Assets to be leased via InvITs and concessions. Finance Minister says the move could raise nearly 5 lakh crore rupees for the centre. Indian exporters await clarity as Donald Trump's new 10% global tariffs kick in today. Sources tell Business Today television that the increase to 15% has not been notified by the Trump administration as of yet. Exporters also say India will gain if tariffs remain at the current levels. Donald Trump is furious after the European Union freezes the ratification of its trade deal with the US. The US president threatens higher tariffs for countries that play games with a ridiculous Supreme Court decision. European Union decision comes just a day after India paused its trade talks with the US. US markets stumble on trade uncertainty and AI fears. IBM is down more than 13%, its steepest fall in last 25 years, a scenario from June 2028, painted by a little-known research firm, Citing, that has spooked the markets. Asian markets also fall at the opening over AI anxiety. It's a major blow for the electric car industry. Electric vehicles likely to lose their green image. Reports indicate new fuel efficiency rules will now ask car companies to account for power consumption in the emission numbers. This move could lead to higher efficiency among electric cars as well. First up, the big breaking news on your screens, viewers. This is crucial. Tata Sons board meeting today. Remember, the board meeting will be considering chairman's tenure. That is, Mr. N. Chandrasekaran may now get a third term. Clearance granted by Tata Trusts. Earlier, the third 5-year term was to start in February of 2027. For more on this, let's go across to my colleague Krishna Gopalan, the executive editor of Business Today. Krishna, you've been tracking the Tata Sons story very, very closely. What does this mean? The board meeting today, starting much before the tenure gets over in 2027.
Hi, Sakshi. Good morning. Nice to be here. There are a couple of factors that need to be understood. This is Chandra's third term, as rightly mentioned, and he took charge in 2017. So the first term actually was done in 2022, and this is coming up much ahead of schedule. There are a few points here. The board of Tata Trust has been reconstituted post the passing of Mr. Ratan Tata. So Noel Tata is now the chairman. So it's a new look board. Obviously, a lot has changed since then. Speaking for Chandra's own potential extension, there are a few factors that need to be considered. He's had a few big ticket developments in the last 10 years since he's taken charge. Notably, the acquisition of Bhushan Steel by Tata Steel, the spinning off of a key division of Tata Motors, and the acquisition of Air India. However, we also have many headwinds that he's got to look into, most notably being the investment in digital, the gigafactories, and, well, as all of us know, the big turnaround of Air India. So these factors will be weighed at the same time, keeping in view the background given the reconstitution of Tata Sons. So Tata Trust, my apologies. So that also needs to be looked at. So we're really looking at a new development as far as the tenure of Chandra is concerned.
Right. Now, Krishna, like you rightly pointed out, some big ticket developments have happened, under his tenure. We've actually seen the group's market cap also surge past $365 billion mark as well. We've seen the privatization of Air India and several other key, points that we have considered. At this point in time, the entire group is also navigating high stakes in terms of future-facing projects, aggressive push to semiconductor manufacturing. You talked about the battery cell gigafactories, the EV space expansion, and right now the big concern with respect to AI and the disruption that is being seen on the IT space, especially with respect to TCS. What do you think is in the offing going forward?
I think the implication is far more dangerous than one can understand, because TCS is pretty much the cash generating machine for Tata Sons. And given what's happened, as you rightly mentioned, in terms of even the IBM stock taking a hit this morning, the whole AI story is now getting into a phase of huge disruption. So TCS's numbers offer a mat anybody, be it Infra, Wipro, they've been under serious pressure. Common sense would tell all of us that the AI juggernaut is not likely to slow down anytime soon. So the dependence on TCS, coupled with the fact that there are big ticket projects, and even at the most conservative estimate, we are speaking of a capex outgo of at least $100 billion, be it
Yeah.
semiconductors, gigafactories, Apple, or even a potential acquisition. So if TCS, it is critical for TCS to fire in the interest of capex being funded out of it, because it just becomes easier for Tata Sons to raise that kind of money in the market. So the disruption in AI is something they could have easily avoided, but unfortunately it's beyond their control. But these factors together will have to be looked at the time of renewal. It's not as if it won't go through. That's not the point I'm making. But fundamentally, I'm saying we're getting into a phase of serious business disruption, and this is really the making of a new TCS in that sense.
Absolutely. Thanks a lot, Krishna, for getting us all of those details. Of course, more details will be, coming out once the board meeting is over, and you will be able to give us more clarity as to what has been decided going forward from here. But this is an important one that all of us have to keep an eye out on today. Let's actually welcome our guests on board. Armesh Kant is now joining in on the program, and we also have Shail Bhatnagar, our, a consulting editor for markets in Business Today. And look at how the Nifty is trading at, in the pre-open trade, 25,641 right now. We're down about 71 points, so indicative of a softer opening in trade. Remember, we've had 2 consecutive days of a positive mood, and the expiry session starts today. Let me go across to Shail now. Shail, good morning to you. What are you watching out for in the markets today? Again, it's going to be IT that will be the pain point?
Well, good morning to you, Sakshi, and a very warm welcome to Dharmesh ji whenever he joins. A warm welcome to let's look at the set of the market. You've highlighted a lot of negatives which are seeping in from Wall Street. Extreme volatility. And of course, we have the end of account for February on today. But look at the Nifty Energy Index. Look at oil and gas sector. Look at how the CPSE index is shaping up. And of course, how the EV space is shaping up. These are spaces where long trades can be taken. And of course, there have been fresh bullish crossovers in the logistics space, manufacturing space, and of course, the steel space. So stocks such as Siemens, stocks such as CG Power, ABB, the MNC setup, Cummins India is doing immensely well. And gold, Sakshi, will now outperform silver.
Right. Now, Shail, I also wanted to understand from you when it comes to the expiry, what are you expecting on the Nifty today? And of course, this is going to be extremely important. February has not been a month which has been celebrated because we've continued to see the sell-off on the FIS front.
That's true, Sakshi, but look at the better part of this all. Nifty, let's leave it to professional traders, but look at the PSU banking setup. People have made tons of money on SBI, on Bank of Baroda, PNB, Canara Bank. This is a sector that we've highlighted often. Metals has kept quiet, but let's look at the positives. Let's look at the CPSE setup now. Let's look at the energy space. Lots of trades happening. Let's look at the MNC space connected to the energy space. Sakshi.
Absolutely. We've seen the markets open at 25,600, swiftly moving below that mark, and about a 0.5% downtick on the Nifty at this point in time. Viewers, you're looking at most of the sectors that are trending lower, barring what Shail pointed out. Oil and gas continues to be higher. Private banks also showing us some strength at this point in time. On the Nifty also, you're looking at a far and few between names that are higher in trade. You have L&T, you have ONGC, Dr. Reddy's as the names that are higher. But on the lower end, again, it's the IT pack. Remember, the IT index is down by over a 2% mark right in the opening session right now. So Infosys, HCL Tech, TCS, Tech Mahindra, Wipro, all 4-5 stocks from the IT pack are the top drags right now. Dharmesh ji is now joining in on the program. Good morning to you, Dharmesh ji. Good to have you with us. Well, what do you make of the consistent IT sell-off that we've been witnessing? It was the severe downgrades by Jefferies yesterday. Today again, CLSA has come out with target cuts on across 8 companies. Of course, the AI anxiety is, leading to more pain on the IT space. What do you expect here? First, it was the export-oriented problems, the tariff-related issues that we were dealing with, and now it's AI.
Yeah, good morning, Ava. Really a difficult and tough times to, deal with. As far as IT companies are concerned, the problems were there for multi years. So it's just an Anthropic, sealing the future hope outlook which was there on the IT sector. I will give you a small data point. FY19 in Nifty 50 basket, the index, whatever IT companies was there, the aggregate profit was around 70,000 odd crores. FY25, the last year, they did 110,000 odd crores. So the weightage dropped from 21% in Nifty 50 to 11% as we speak. So, I mean, they were already in a set of trouble. They were trying, and there were different narratives played out at different time. First, it was interest rate cut, then there's discretionary spending and all, but it was not happening for the Indian IT companies. And now with Anthropic, the challenge is whether they will be able to sustain the revenue. So, what will happen? Definitely, the gaps will be filled by the integration job, which they will do by integrating AI into the different softwares. But the value addition of Indian IT companies, which are there to be offered on the table, will come down. So, it will not be only a squeeze on the top line, but at the same time, the margins will further squeeze. And that's the problem with Indian IT companies. So, where there is a clear trajectory that things are not going to shape up well, maybe you can fill the gaps, but you may not grow from here. Then why to buy in equity market? We always go for growth stories. So, I mean, there may be cash in the balance sheet, dividend flow, but this cash flow will also, slowly taper down. So divided camps are there. I am in this firm camp that there will be tactical bounces definitely on IT companies, primarily helped by currency depreciation, but those will be tactical. It's not a structural story to play out. So we are avoiding except one stock, Aurionpro Solutions. Otherwise, we are out of the IT basket completely.
Okay, we'll take another big breaking coming on your screens now, viewers. This is with regards to State Bank of India now forecasting big boost in terms of the GDP numbers, the Q3 GDP growth. Now, SBI research report indicates that the Q3 GDP growth could be seen at 8.1%. So GDP growth beyond 8% could be coming in is what the key expectation is. SBI research report also indicates that consumption remains strong overall. They've also expected that FY26 growth is seen at 7.4% versus 7% in the economic survey. And the second advanced estimate release will be on February 27 for the same as well. What they're expecting is that the Q3 GDP numbers could be well beyond 8% at 8.1% as well. So big boost is what you could expect in the coming up Q3 GDP numbers there. So that could be a big positive that the markets can take heart from at this point in time. Dharmesh ji, how do you view this? And do you think that the markets will be able to, seek some kind of a courage from these strong domestic numbers, even if the external environment is very shaky at this point?
Well, my sincere apologies, Sakshi. In the rush, I said Ava, so good morning to you, Sakshi.
Good
See,
morning.
I mean, if you look at the Q3 numbers, so the numbers were pretty good. Outside the Nifty 50 basket, we did an aggregate of over 500 companies, and there the run rate of the PAT growth, despite taking labor code into account, was 20% on year-on-year basis and around 9.5% on a quarterly basis. So there are many pockets and sectors of the domestic fixing economy which has been actually doing well, and all the tailwinds of rate cut and direct tax and direct tax rate cut has been playing out. So definitely we think that the GDP forecast, I mean the real GDP forecast which people are saying will come through. What is more important is the nominal GDP forecast, because that is what plays out into the corporate earnings growth trajectory. So that if crosses above 11.5% would be a music to the ears for FY27, because the prices have corrected quite sharply for all the companies and valuations are now very comfortable. So to my mind, I think we will do more than 11% kind of a nominal GDP growth rather than getting restricted to 10.5%. So that will give you a 12 to 14% kind of a tailwind on the earnings growth for FY27. So the market broadly is a very good place for doing your cherry picking across the segments. Only concept is go bottoms up, don't go top down.
Bottoms up is the strategy that you need to follow at this point in time. Don't go top down into the markets. There are several opportunities that you can definitely look at as well. Any key other stocks that have come onto your radar, Shell?
Sakshi, I'm just looking at the pain in the market. So monthly expiry, Nifty is down 143 points. Very hard to suggest, a long trade at this point of time, despite what SBI Capital and their research team are telling us. You and I have to grapple with the daily realities of life. But maybe for the month of March, we will see the Nifty Metals Index do pretty well, because February has been painful. Painful in the sense that profit booking has happened,
Yeah.
except for steel where record highs have been seen. So the usual suspects, look at Hindalco, look at National Aluminium on the long side. Nice correction that's happened in National Aluminium. From 432, we are down at 342. So
Okay.
33% correction in price. Actually, a 25% correction in price. So those are spaces that I would look at.
Okay, so the metals index could be in flavor. In a bold move now, viewers, to fuel the country's infra boom, the government has now rolled out National Monetization Pipeline 2.0. This ambitious plan is now likely to raise 4.6 lakh crore rupees for the government in the next 5 years, while unlocking 16.7 lakh crore rupees in asset value to supercharge infra funding. Finance Minister Nirmala Sitharaman has launched the plan last evening by saying that it is more than 2.5 times bigger than the first plan, which raised about 4 lakh crore rupees. The new pipeline envisages private investments of 5.8 lakh crore rupees as well. And the biggest pie in the monetization plan, more than a fourth, actually comes from highways and logistical parks as well. The other big contributors will actually be power sector, ports, railways, coal and mines. And for more on this, I'm now joined by Karishma Sudani. Karishma, big jump from NMP 1.0 at this point in time. So the government is looking to raise a good amount of fund over the next 5 years. Private capex and private investment is also expected to jump by a huge amount.
Well, Sakshi, absolutely right. In fact, you mentioned that this is a 2.5 times higher target that they're looking at. It was the National Monetization Plan phase 1 of 6 lakh crore, which has been almost 92% achieved as per records and the early estimates that have come in, which definitely gives government a boost to take it forward. If you remember, it was during the budget press conference back then, when we had also asked the Finance Minister Nirmala Sitharaman on her plans on disinvestment, and she did very loudly mention that more than disinvestment, her focus is now going to be on National Monetization Plan. The government has been big on its infrastructure building, and to put this amount in highways and railways, followed by other infrastructure instruments, is the crux of how they're planning their economic policy towards 2040. A strong capex target of more than 11 lakh crore also indicates that they want the government expenditure to be used in order to build infrastructure, which will indirectly,
Yes.
of course, encourage investments.
Absolutely. Thanks a lot, Karishma, for getting us all of those details. So the infra space will largely be in focus. Dharmeshji, any key favorites in the infra space or overall in the markets?
Yes, actually, I mean, Larsen & Toubro continues to be the favorite, and there were, several news flows sounding that they will lose business in the Middle East. Nothing like that is happening, and the company is being such a big conglomerate continues to march on with new order flows. Even now, they enter into the defense sector with fifth generation aircraft manufacturing will again add to their overall arsenal. Run rate, I mean, they are sitting on a pretty large order book. The run rate of the order inflows has been quite good, and they have been able to maintain the operating margins. So that will be the first beneficiary of this entire extra spending which will come through. I think railway is one sector which has been neglected for quite some time. 2 years have been lost in the railway space. Things are picking up out there. Railway minister has been sounding very, aggressive on announcing different projects and awards. So I think that is one space which one should look into. And there, our
Okay.
topic has been not financing, but I mean, on the infra space, that is Incor International. I think valuation wise, it's the cheapest among the railway basket. One should be looking into that. And IRIDA, I mean, that is one more finance company which will benefit from all this power and renewable
Yeah.
energy segment. The numbers were pretty good for last 4 quarters, and the stock price has taken sharp beating. It's a very attractive valuation to buy at around 120, 125 levels. And we are looking at around 160, 170 from a 1 year perspective kind of investment horizon.
Absolutely. But I have to ask you on the IT space, which is continuing to slip even further now, down by 2.7%, nearly a 3% cut today on the index level particularly, after IBM has crashed about 13%, and what we've been seeing as an impact of Anthropic and other AI-related issues. How are you approaching the sector? Are you completely exiting it at this point in time? Are you looking to buy at the lower levels, looking at some improvement or restructuring to take place, reimagination to take place at these companies? Because these are fairly large conglomerates that we're talking about.
Sakshi, they are, but I mean, the performance has not been to the mark. So they have been losing business. They've been struggling to maintain their run rate. So last 2 years, despite intermediate IT rallies, we were totally out of it, and we never recommended. Except, I mean, two counters in between, we did have a trading bet on Coforge and Persistent System. And I mean, last couple of weeks back, we were totally out. Only one company which we have been maintaining as a buy call in the IT space, that is Aurionpro Solutions Limited. And the reason is that it's not a SaaS company, it's a product company basically, and they have an ARIA AI model for banking and transaction suite. So last 3-4 months, if you look at, they have won seven orders, three from public sector bank on the banking transaction suite. Data center also, they have got an order from IDBI Bank and another public company. It's a foreign company, and 1,700 odd crores of order book they are standing on. The order pipeline is very big. Our interaction with the management says 3,000 odd crores. I think 25-26% of a run rate of PAT growth for next 2 years is very foreseeable, and it's available at 16-17 times price earning multiple. So that's the only company which we are looking at. 1,675 is the target price from 1 year perspective.
Fantastic. We're out of time now. Dharmeshji, thank you so much for being with us on the morning edition and helping us with all those market insights. Thanks a lot, Shell, also for giving us all of those insights on the markets as well. Viewers, we'll wrap it up on that note, but do stay tuned with us on India Today. And don't forget to tune in back at 3:05 p.m. when I get you all the market closing action on India Today.